and welcome to today's video, which is called S&P 500 bottom. This is a very valid question and we are going to find out the answer right away after the closing bell when Nvidia reports, because the camps are split both ways as to what to expect. So it depends really upon the guidance and whether the current data, current earnings and margins would not be disappointing given all of the expectations. Thank you for liking these videos and subscribing to the channel. You know pretty well what I do on my side for clients, and the same goes for live Telegram channels, both real assets and equities. You know that I called on the weekend for cryptos to start breaking down in earnest, and that's exactly what we have seen. And you be the judge whether today's upswing is convincing enough to mount significant longs here or just not yet. When it comes to yields, this is the most significant chart, not cryptos but yields retreating, and it's not a matter of US markets but global ones. Thanks again for the great reception of the deep dive into yen carry trade risks for risk taking. That's the Saturday's presentation, which I will be linking to, and you can see that Japanese government bonds have seen yields turn south as well, which is quite taking the heat off and putting this from the emerging spotlight back onto the back burner. So much for yields, which would however not retreat way too much today. However, these do send a message not just regarding Friday's core PC numbers, but especially regarding unemployment claims tomorrow, because there is budding deterioration in the job market, and the cost cutting at the federal level would not be relieving those pressures. Quite to the contrary, I think we are going to see some kind of a surprise rather to the upside than to the downside in unemployment claims tomorrow. This is the probably most important retweet of yesterday's session, when following the rebound of one of the logical support levels, you had seen my call for a tentative bottom, and this is clearly shown in this retweet, in this tweet, showing you exactly what I had been retweeting this European morning on my feed. And just as I had been writing the slide for intraday clients in the Nasdaq, Ellin had been capitalizing on the rebound. So we had delivered gains to all clients, whether they were leaning bearish or looking out for buying opportunities. This is the hourly chart, which quite well shows the tweezer bottom. It was a tentative one, however there was not yet enough rejection, and the picture is quite inconclusive. Inconclusive in the way that it depends upon Nvidia, and the implied volatility move is quite significant, and equities can both rise and not look back, or go for and break below yesterday's intraday bottom. So from the swing trading perspective, this is not really an opportune place to initiate fresh longs unless you are willing to place your stop loss below, significantly below that intraday bottom of yesterday, which I don't think is a good idea from the risk-reward perspective here just yet. What's been though most important from the open trade management perspective yesterday was that I and Ellin have picked the opportunities where the price movement did not go against the grain. It did not take us into an open loss, and quite to the contrary, the trade had been all the way in the black, which explains the maximum adverse excursion being 0 because it did not go against us at all throughout the day, be it short or be it long call made. But now, as regards today, let's dive into another aspect of the tweet that I had made, where I had been noticing breadth improvements in the latter half of yesterday's regular S&P 500 session. If you had looked on the heat map or on this sectoral overview, it would not have been all that readily apparent because, frankly, risk-on characteristics aren't there much really at all. Tech, financials, sleepy, discretionaries underperforming staples, and utilities also down, while the message is negated by real estate going up. So it's not really leading to any kind of a firm conclusion, this sectoral view. However, if you fire up the advanced decline line, those advancing issues had been somewhat outnumbering, even though the volume had been quite bearish leaning. However, that's a matter of definition of this particular, the middle one, breadth indicator. So this and other metrics such as percentage of stocks trading above various moving averages is leading to the budding sign of optimism, which was exactly what I had expressed in yesterday's tweet that I have shown you in full. Those 4 to 5 lines, I will not go back because I want to get this presentation out to you as fast as I can. Thank you for liking and subscribing to the channel, my join page to help you select what's right for you. Professional channel, you know pretty well already, I hope so, and disclaimer obligatory. And let's talk soon again. Thank you.